So I was reading this kind of interesting article, Zero Hedge, about 3 days ago. They have this article titled, "With China Facing Currency Liquidity Crisis, Ex-People Bank of China Official Urges the Use of, quote-unquote, nuclear option." What is the nuclear option? Well, number one, Donald Trump has always accused China of being the biggest currency manipulators of all. And I'm going to read this to you, but at the end of it, it talks about this period of time from now until Inauguration Day of Donald Trump to let markets or the Forex, as far as their currency is concerned, the yuan, devalue to, in other words, whatever level the market says it should go to. And I'm just thinking, imagine a significant, like unprecedented, something we never would have expected to happen all at once or so soon, devaluation in China. What does the cost of gold and silver in China become? It's the same as Venezuela. Inflation or hyperinflation, like Venezuela's having right now. The cost goes massively up, which also means if you happen to have gold or silver, your profit in holding on to that shiny metal goes way up. And all it was supposed to do is protect your wealth, right? But there's another thing. Bitcoin. I've shown you in, just to do it again, fiat leak. Let me put the page on here for you to see in case you want to take a look at this with me. We'll just watch it for maybe 30 seconds. Immediately, what do you see? USA and China. What do you see? A couple giant ones. That little ding, maybe if you heard that or not. That's when the big one comes across. Dip, ding. It's a big one. See, play sound when rate is 20 Bitcoin per second or higher. Oh, there's 18. There we go. There's another one. Where is the action in the United States right now? Oh, there goes one. There goes a little drip, a little droplet of Bitcoin. Meanwhile, Bitcoin is absolutely flooding into China. This is unprecedented. And again, I've done this same video here. I've looked at this same site during the day, morning, midday, late afternoon, like before I get off work at 5 p.m., talking Eastern time. And then at night, like right now, which it's Saturday night, 31st, obviously the last day of the year. So by the time you see this video tomorrow, Happy New Year 2017. But it's 9 p.m. Eastern time right now as I'm looking at this. So I'll go ahead and go back to my normal screen. Point being, which as I'm about to read this to you, just keep in mind, where do you think you're going to see a massive influx of people's money in China should, as this former ex-People's Bank of China official is urging the country to do, which is what he's saying is, let's just go ahead and devalue. Let's let the markets take the currency where it needs to go, which is essentially devaluing it according to this. So you're a Chinese citizen. I want to put my money in something that doesn't get devalued. Oh, Bitcoin. Easy to do. Or gold and silver. Because, as I've mentioned at least twice now recently, the premium in China for gold is about $30 over market price. COMEX market, like you go online right now, what's the price of silver? Oh, it's $11.70, whatever it's at. Add $30 to that in China. So, question, you're a mining company. You're selling gold or silver, in this case gold. Do you want to sell it to the bozos in America who are buying it from you? Well, we've got these contracts. Yeah, I know. But they're paying $30 per ounce more in China. You're going to face lawsuits from your shareholders. You're going to face lawsuits. Why? They're going to say, why in the hell we could be making more money? You must be doing something on purpose. Why on earth would you sell it for the cheapest amount you can get when you can just go over to China and get even more money for it? So that's an interesting thing we've never seen before, premium like that, develop in China. So the article, with the People's Bank of China fighting tooth and nail to slow outbound capital flight, which is what? What is outbound capital flight? money over there fleeing into other places. Remember Canadian real estate they were flooding it with? Bitcoin, as you just saw on the chart, they're flooding. They want to put their money somewhere else. They don't trust the government paper, as in paper currency. So the People's Bank of China fighting tooth and nail to keep the money inside the country instead of flowing outward, which according to Goldman Sachs has reached $1.1 trillion since August 2015, and which these days mostly means keeping the yuan, which is their currency, from depreciating to all-time new lows below 7 yuan to the dollar, so 7-to-1 ratio. The Chinese central bank may have its work cut out for it in the immediate future. The reason is that, as Bloomberg says, the first day of 2017 is when an annual $50,000 quota to convert the yuan into foreign exchange resets, stoking concern there will be a rush to sell the local currency, with tax payments and a regulatory assessment also tightening liquidity in the money market toward year-end, manifesting itself in soaring unsecured funding rates, such as overnight repo hitting 33%, as noted yesterday, paralyzing both the overnight and longer-dated interbank lending markets. Now, think about something. That keyword just caught my eye, or my ear, both. Interbank lending markets. So that overnight repo rate, that is the interbank lending rate. And the interbank lending rate is a rate in which one bank charges the other money back and forth to borrow. A little different than giving a loan out to me or you. Lindsey Williams said, and I hate to bring this up because his last video I didn't really agree with too much, but when he says something right, gotta give credit when credit's due. 2013, he said they're gonna do a little test run, and they're gonna mess with the club is gonna mess with the interbank lending rate. Happened on the Friday. I saw and read the news articles. If this rate stays where it's at, China just lost $1 billion from this right now. If this stays by Monday morning, there'll be blood on the street, bloody Monday on the markets. He was told that don't sweat it, it's just a little test run, and they just bumped it up a tiny bit. Monday came, they were right back down to normal, everything was fine. He said that gave them the information they needed to know. When we need to take this puppy down, the economies, the markets, we will mess with the interbank lending rate. That's what he said. So, unsecured funding rates, such as the overnight repo hitting 33%, they only moved it a tiny, tiny percentage when they did the little test run. This is 33%. Paralyzing, what it says, paralyzing because of that, both the overnight and longer dated interbank lending markets. Markets are paralyzed because of that move. January may bring scant relief as lenders prepare for stronger cash demand before Lunar New Year holidays, which are only a month away. The narrative is familiar. China's markets are seeing renewed pressure this month as the Federal Reserve projects a faster pace of rate increases for 2017, and its Chinese counterpart tightens monetary conditions to spur deleveraging and defend the exchange rate. The declines are capping off a tough year for investors during which bonds, shares, and currency all slumped, with the last hitting all-time lows, just as Kyle Bass had predicted roughly 1 year ago. Much of the blame is on the unique calendar this year. You have the Chinese New Year quite early, and because of that 1 month window, most of the banks will try to lock the money in a 3-month cycle, said Arthur Lowe, Hong Kong-based head of Asia ex-Japan fixed income at PineBridge Investments. The current situation in the bond market is partly because of the year-end and because of the Chinese New Year. But two far bigger culprits are the tightening Federal Reserve, and the rapidly deteriorating standoff between China's housing bubble, which Beijing desperately wants to deflate into a soft landing by withdrawing liquidity, and China's banking system, which in turn is desperate for more liquidity, more easing, as in quantitative easing, or at least a reduction in required reserves. Meanwhile, the local debt market is flashing red warning signs, yet most market participants seem to be blissfully ignoring them. China's 10-year government bond yield has surged 21 basis points in December, poised for its biggest monthly increase since August 2013, when the local banks nearly collapsed as a result of a failed deleveraging effort. The yuan's 6.6% decline in 2016 puts it on course for the worst year since 1994, while the Shanghai Composite Index is headed for its largest drop in 5 years. The 3-month interbank lending rate, known as SHIBOR, rose for a 50th day. So 50 days in a row, we've had the interbank lending rate over in China rising. Wonder who did that. Its strongest streak since 2010 to an 18-month high on Wednesday. The overnight repurchase rate on the Shanghai Stock Exchange jumped to as high as 33% the day before, the highest since September 29th, as banks become more reluctant to offer cash to other types of institutions. The latter have to turn to the exchange for money. But the worst case for China is that the local population is well aware of the financial problems facing Beijing and has been scrambling to transfer its cash offshore. And as Bloomberg has noted, the recent surge in onshore yuan trading volume suggests outflows are quickening, according to Harrison Hu, chief Greater China economist at Royal Bank of Scotland. The daily average value of transactions in Shanghai climbed to $34 billion in December as of Wednesday, the highest since at least April 2014, which brings us to the January 1 clock reset and the imminent surge in perfectly legal capital outflows. In the new year, the new foreign exchange repurchase quota starts, so we expect yuan positions in January to drop significantly. Within the foreseeable future, the market will be pessimistic about funding conditions. It happens to be near year-end now, where money markets are tight, and after New Year's Day, it's almost Chinese New Year. Ultimately, trying to keep a lid on the yuan is a game China will lose, and some are already preemptively admitting defeat. Among them is Yu Yongding, a former academic member of the People Bank of China's Monetary Policy Committee, who overnight urged his former People Bank of China colleagues to engage in, quote, the nuclear option, a sharp, one-off devaluation similar to what China did in August of 2015, except a one-off deep devaluation, right? In emailed comments to Bloomberg, he said that China has a window from now to President-elect Donald Trump's inauguration to halt Forex intervention and let their currency depreciate to its equilibrium level. And what level is that? No one seems to know. But that means devaluation. This could be any country. China is no longer, and has not for a long time, been a third world country. It is absolutely a first world country just as much as we are. Okay? And by chance, there's like at least 3 or 4 times, maybe more than that, population in China than the U.S. has. So everything over there is amplified significantly more. But if you're a Chinese citizen, aren't you going to want some gold and silver and or Bitcoin? I don't think I even have to ask that. You just saw what I showed you on Fiat Leak. You've already seen it. You already see the answer, which also means if people are putting their money into Bitcoin over there, there's not a chance in hell that they're not putting their money also in gold and silver. Not a chance. They are absolutely doing that. So hopefully by the time it comes here, we got our little problem. Like I've always said, I feel like we'll be the last ones. It'll come here last. That's what I think. Don't mean I'll be right, but that's what I've said and that's what I think. So we can see what happened in Venezuela. Ooh, that hurt. What's happening in China? Ooh, that hurts. What happened in India? Ooh, that hurt. And there's a few other countries I could name. But when it gets time when I say, ooh, that hurts, not that's going to hurt or look like that hurt for them. Ooh, that hurts for us. That's okay. Oh, that's okay. Let me go look at my safe. Oh, yeah, great. My silver's still there. And by that time, my new 10-ounce Jesus silver bars of slaying the bankers, running them out of the temple, whipping them out of the temple, will be coming in. And someone was like, well, when you get them, show us on the camera. And I think I'll remember that. Because as much as I don't, know about religious things, I know about them, but I don't tend to follow any religious doctrine at all. I do think that's fascinating. to run some banksters out of the temple, the money changers. Get your sorry asses out of here. And I do believe Jesus would have used that word too. Next video coming up. Take care.